global liquidity is surging. The M2 money supply, the broadest measure of liquid money in the economy, has just hit an all-time high of over $55 trillion globally. But what does that actually mean for the financial markets? More importantly, what are the implications for crypto? Today, we're going to break it all down. No hype, just the macro signals that matter. What is M2? Why it matters? M2 is more than just a monetary statistic. It's a real-time pulse check on global liquidity. It includes cash, checking deposits, and easily convertible near-money assets like savings accounts and money market funds. When M2 expands rapidly, it signals that central banks and governments are pumping liquidity into the system, often through stimulus, credit expansion, or low interest rates. This isn't just theory. Liquidity is the fuel that powers all markets. Stocks, bonds, real estate, and yes, crypto. When there's more money in circulation, that capital seeks return. It chases yield, growth, and store of value assets. That's how you get asset bubbles and bull runs. The macro environment. Today, right now, global central banks are walking a tightrope. On one hand, inflationary pressures are still elevated in key economies. On the other, growth is stalling. To avoid recession, policymakers are quietly loosening liquidity, even if they're not cutting rates aggressively yet. That shows up in M2. This surge in money supply is not random. It's part of a broader macro shift back toward reflation, the idea of reinflating growth via monetary easing and stimulus. Whether it's quantitative easing, backdoor liquidity injections, or rising government deficits, the net result is the same: more fiat in the system. Why crypto is sensitive to M2 growth? Now let's talk crypto. Digital assets like Bitcoin and Ethereum thrive in high liquidity environments. They're non-sovereign, finite, and increasingly seen as macro hedges. When M2 rises, crypto often follows not instantly, but structurally. Why? Because when fiat debases and capital looks for protection, crypto becomes a magnet. Bitcoin, in particular, was designed to do exactly this: preserve value in a system where money creation is unlimited. But this isn't just about Bitcoin. Altcoins, DeFi, and tokenized assets also benefit. More liquidity fuels more speculation, more risk appetite, and more innovation. Liquidity doesn't just buy coins, it funds protocols, DAOs, and entire ecosystems. Looking ahead, what this means for investors. Here's the takeaway. The record high in global M2 isn't just a statistic, it's a macro trigger. It tells us that the tide of liquidity is rising again. Smart investors pay attention to these tides, because whether you're allocating to equities, gold, or crypto, liquidity is the current that moves them all. Ignore it, and you're just reacting. Understand it, and you're positioning ahead of the wave. As M2 continues to climb, the long-term backdrop for crypto strengthens. This is not just about price targets. It's about macro alignment. And right now, that alignment is leaning bullish. Final thoughts? If you're serious about navigating this cycle, follow the liquidity. M2 is telling the story. All you need to do is listen. Thanks for watching. Stay sharp, stay positioned, and as always, watch the money. Remember, nothing in this video is financial advice. Don't forget to like and subscribe too, please guys.